This call will now be in
All right, good. We are recording. All right, good. Whoever wants to be here is here by now. All right. Yeah, thanks, Rick, for the reminder there. Our blue light shades. Yeah, I might put sunglasses on right now. All right, so for now, I'm in this long position, basically entry around here and going. I've de-risked it completely. The stop is at my break even, so if it stops out, I'll eat some spread, but that's about it. Other than that, it either goes or it doesn't. I made one attempt to get into it earlier at a different contract that is here. It was, I think, in this area, and it dropped, and I stopped out pretty quick. Ate some spread, so it took some loss a little bit further than I wanted to. And that's that. So in this trade for now, again, no risk, so no issue. Either it goes or it doesn't. The target's up here. The entry, first step is the candlestick chart, 30-minute candlestick. Consolidation, you have the bottom there. False breakout, which you anticipate a good breakout on the other side. So when it starts to get up there to break out from that consolidation, I'm interested. That's when I zoom into the 1 minute. It's up in this area. See a little ABCD pattern right there. Consolidation for the breakout. I got in on that breakout, stopped out. Bounced off again, and it was in this area where I started scaling in, made a new high beyond that high. I put this line here after this candle was formed and made that drop. Well, that's a good setup for a breakout. So yeah, that's the first entry, and then I saw it's bouncing off of my bigger picture level, that Fibonacci level. So I added further. I think this was the largest size add. And then as it made new highs, I kept putting it in, and the stop was below, I think, here. And then as this made this new high, I moved the stop in here. And just now after this little consolidation, I've moved the stop to below this wick here, which happens to be about my break even, right about there. Target is up in this 564 zone. Ideally it goes. If it doesn't, I'm shit. It's worth it. It's worth trying. So 2 attempts so far. One didn't work. One is, well, it's halfway there. And that's all it is. Either it goes or it doesn't. And you can't try to manipulate the thing. You just got to let it be. The truth is you don't know what's going to happen after you enter. No matter what you do, as far as waiting for a perfect setup, you get a perfect setup, you scale in, you add in, you think it's fantastic, it's going to rip, it's going to go. But the truth is you have no idea. I don't know what's going to happen. That's why I still have a stop in place. If I had an absolute guarantee that it's going to go, I would not use stops. I wouldn't be bothered. Just let it go. Right? I wouldn't be sitting and watching it. So, yeah, that's what I'm at the moment.
And what the thing I'm a bit struggling with on the 30 minute is you talk about a consolidation and it's just 2 candles. So the thing I'm struggling with is that I see consolidations everywhere because it's just 1 or 2 candles.
Yeah. See, yeah, you have a consolidation here. You can consider this one as well. But what really keeps your head in the right place is only pay attention at your key levels. I have a key level here, right there. And this was a big consolidation, as in on a 30-minute chart, right? Consolidation and a drop from there. That's my critical point. And when it comes back to that level, I see consolidation, fractal pattern. You see, oddly enough, it's a near precise pattern. You have 2 candles here, 30 minutes, 2 candles, 1 minute. Isn't that something? So there you go. There you have it. It didn't happen to work out the first time, but the second time so far, so good. It looks like a really good break. And look at this example, right? You got a top here, right? This is real-time actions. Top here, and you got these ascending bottoms. This is an ascending wedge, basically ascending triangle. It's a very encouraging sign for a breakout. It's high probability for breakout. Again, probability, no guarantee. Probability of a breakout. No guarantee that this thing wants to run. Just let it be. All I've done is if it fails here, it pops down, I'm at break even, so no risk. Either it goes or just, you're out of there and wait for the next one.
Yeah, but it looks like a very troubled area. If you look at the history as it showed, like months ago, it just like got stuck in there and resistance for months ago. It just go all the way back. It's a few times in the history come to that area. The buyers, sellers are all over the place there.
That's the key. Now, what time frame are you choosing? Whatever time frame you choose, you got to stick to. I choose the 30, and I'm sticking to it.
Okay.
And realistically, 30 minutes. At the moment I start zooming out beyond a month or 2, just forget it. To me, this is like all-time high. Let's just let it go. It'll screw around. It'll pop in on it. If you're working on a weekly chart, monthly chart, or something like that, okay, that makes sense. Then you work with that and you build your consistency on that. I'm working on this, and I'm just working with that. At this point, oh man, that's a false break. Hold on. I want to see these highs push. It just won't push. All right, what are we missing here? Oops, sorry. We got some questions here. Who was first? Harsha, then Sumit, then Piyush. So yeah, go ahead, Harsha.
Yeah, real quick. I was looking at the 0DTE decay rate. It seems that the decay doesn't really kick in till about 12. I mean, it does decay, but from 12:30 to about 3:30, the decay rate accelerates. From 3:30 on, it falls off. Is that pretty much what you're seeing as well?
That's true. That makes sense. Well, I haven't observed it precisely, but that's my understanding of it. The closer to expiry, the more it just accelerates to zero. Or if it's in the money, it doesn't go to zero. It expires with some value, right? So I'm going in the money. So you got to think of, is it out of the money? Then it goes straight to zero. That's why you go out of the money and it's not there. Then you're, oh, shit, excuse me. Oops. Sell. Oh, what happened there? You see, that's a problem. Don't pay attention. Come on, sell this damn thing. I can't sell it. It's moving too fast. That's dangerous. I'm out of here. Sell. See what happened? Oh my gosh. I don't want anything to do with this. Break even. Oh man, I ended up in a short. No, it's all done. Okay, all done. You see that? Holy shit. Couldn't even get filled. Something happened. That's the problem with the SPY. This happens regularly, you know? It should have been out at $3, which would have been perfect. That's my target. But ended up short for a moment accidentally, and all right, ended up with a decent day. Well, there's an example. Your winners bigger than your losers. This should have been close to 200 with that little pop. It just didn't happen. It should have been like 190 or something. Anyways, all right, that's it. That's done. Happy with that. Fuck, what were we talking about? Decay rate, right? Yeah, so it accelerates to zero. The contracts expire with no value when it's out of the money. That's the truth. So the closer you get to the expiry moment, the expiry point in time, the further it accelerates to zero because there's not enough time left for it to actually go into the money. So that's basic. But contracts that are in the money, like this one, for example, this is a 262. It's in the money. 262 is way down here. As long as it closes anywhere above 262, it's not going to go to zero. It's going to close at whatever, somewhere here. Time decay will happen. It'll decay, but it won't go to zero. It'll have some value in it. Does that make sense? That's how I understand contracts.
Thanks, Avi.
Yeah. All right, Sumit, yeah, go ahead.
Yeah, so my question is also related to consolidation, breakout, and retest.
Yeah.
Now, when I've seen like nowadays, when after consolidation and breakout, you take a trade and then add on the retest. So where is the ideal stop for you? Is it below the consolidation or below the breakout?
Yeah, good question. And you know what? This is very good price action to assess that. It's complex price action. So let's say you're looking at this, you don't have any levels, you have this high. It came here and it rejected, so you treat this as a high. Okay, let's look at the green line. It broke out here, right? It failed to break out. It came back in and bounced off of close to that high. All right. Now, you could think that, this is a retest because really, you got a huge move. It just retests just a little bit lower. And then it goes, but it's hard to assess. All right, you want the retest truly to be as close as possible. Let it go. Here's a genuine looking breakout. Comes down and bounces off that high. Look at that, right? Pretty cool. So let's say you find your entry in these candles. Your stop should not be just on the other side of the level. It should be on the other side of the price action. I think of this candle here. This is the bounce candle. It dipped into the green line a little bit. So you don't put it just precisely at the bottom of that candle. Give it a little room. Give it a bit of room right there. You're getting still very good RVR as it runs, right? So you just do it that way. Watch the price action around the levels. If you look at it further out, what I was truly looking at, these are my bigger picture levels, right? Avi8ors levels. So resistance, turns out it was a false breakout. Then it really did break out. And here's a fantastic retest. Look at the wick on that. Boom. So I'm interested, wherever I enter, I want my stop right below this red candle, which also happens to be almost precisely at the level, right? And then you got to make sense?
Yeah. So basically make decision as you discover the price action.
Basically, yeah. Real time. Stay focused, Yeah, Piyush, go ahead.
Hi, thanks. Just real quick, how far back do you look on your 30-minute chart to look for your support and resistance and basically any kind of analysis?
Most of the time it's like this. So you just have to look at the previous day, or previous 3 days, whatever. You don't have to. Like today now, it's unusual. It's gone beyond the range of the last couple of weeks of where it's been. And realistically, I'll zoom my chart out like this, and now we're getting into 2 months ago or something. At that point, I'm just not interested. It takes too much work. It's not even worth it. Anything that takes more than 5 seconds to figure out, to be honest with you, it's just not worth it. 80-20, right? So I'm just relying on these lines. That's about it. You can see basically general price action last couple of weeks is kind of the way to look at it. The moment you have to start really zooming out on no matter how many pixels you have on your screen, it just gets messy. So typically a couple of weeks is the max. Like today's a maximum day for zooming out for me. And really, I zoomed out to a point where I don't see nothing. Forget it. I'm just going to rely on levels. And I see there's nothing there. As it breaks out, it's going to be clean. So that was my plan. It's clean to go. That's why I held the whole thing until there. But this wick just messed it all up. I could have had, again, another 40K, 50K left on the table because of that. You guys saw that execution. That's the dangerous stuff, guys. I'm really telling you, like, you got to watch these things on the SPY. This happens. Market makers. It's very actively traded by massive, funds and stuff. You can easily blow up 50K, 100K, and you've seen me do that. You don't want to do that. It's not fun. So we have that. All right, last question, Gaten, and then we'll get into the questions that have been posted for this session, and let's roll with it. Go ahead, Gaten. No question? No? Not here? Should be here. All right.
Sorry, I was talking to myself. I was muted. So getting back to the 30-minute, I'm sorry, because I'm struggling. So sometimes you define a consolidation as just one candle, but sometimes it's two candles, or multiple ones. Or is there any objective criteria to identify a consolidation?
Give yourself a 1 month limit. How about that? Don't go beyond a month.
Okay.
That's how it most of the time ends up for me. Like today, it's zoomed out to about a month and there's nothing there. Forget it.
And then you look for smaller candles, I suppose. Smaller candles in a certain area.
Mm-hmm.
Okay.
Yeah, that's the entry area there and all that. Oh, this looks so ugly. I hate this. Look at that. I couldn't even exit properly. I exited way down here where, I don't know. This is actually really a nuisance. You take the time to hold your risk and tighten it up. And it's the stuff that pisses me off.
Same thing happened with me yesterday. SPY also did the exactly same thing somewhere around 1:30 p.m. something.
Yeah, it does this. That's madness. And really just wait for another 60 seconds and you get the target. But you can't guarantee this thing is going to come back up. It's going to rip down against you. I mean, somebody tweeted something maybe and it's just going to go straight down. And now you're in $100,000 loss because by the time you exit on the spreads, so that's the scary stuff. All right, let's get into some of these questions that we got in our forum. This forum is great, guys. Just type in the questions you want to get into this during these sessions, and it's easy to access and for all of us to read and go into. All right, what do we have? Okay, first one here. Sujit, sometimes you get caught up in chop. What's the best way to avoid chop? Sujit, the best way to avoid chop is look at a 30-minute chart, and where it's choppy, it's going to be choppy. So let's see here. Choppy in the pre-market, sure enough, that's where it's choppy. Simple enough, right? Here, you look, there's nothing to tell you it's going to be choppy, so don't assume it's going to be choppy. Let it just run. Look at the pre-market, or not pre-market, just look at the 30-minute action. See, it got choppy here. What do you think happened here? It got choppy here, the pre-market. What happened at the open here? First hour and a half, 2 hours. It's all choppy, right? Think of it that way. I think that's the easiest way to know it's likely to be choppy and you don't want to mess with it. So try that. So Khan, what is the 80-20 way of managing risk for beginners? Yeah, Lefty got a good answer here. Range orders. Range orders are, let's get into this. 1 minute chart. Let's say you get your entry up here. You want your stop here at let's just call it 560, 180. Okay, you want your stop here. You want your 564 target. Let's say that's the trade plan. Let's say you enter somewhere here. And you go into DOS, and I'm not going to show you exactly how to do that today, but we can get into that as well a bit later. It's an order. It's OCO, means one cancels the other. So essentially 2 orders go into the market. If one of them gets hit, the other one gets canceled. So one is a stop order here, where if it comes down and hits your stop for 560, 180, if you specify it there, it'll hit that, it'll stop you out, and it'll cancel that target order. On the other hand, if it goes in your favor and it hits your target, it'll take you out of that position at the target and also cancel that stop order. So you don't have pending orders. One thing to watch out for with that is, I've done this. I got a setting in my DOS where if none of the orders get hit and the market closes, or it's approaching the close, what happens is 1 minute before the close, DOS liquidates my positions completely. I've got that setting in there, just completely liquidated. I don't want to hold anything overnight, even by accident. So that's a good way to manage risk. And then once you put OCO orders in, range orders, you don't need to watch them. Just leave it. That's the best thing you can do in your early years of trading, even later on. I say the best way to manage the trade is don't manage it. Just let it be. Really just let it be. I think that's very important.
Actually, I think that there's a you can choose stop from the stop order style of montage, and then go for choose stop, then range market. If you choose stop,
yeah, range market, yeah, that's how it is. Yeah.
And then there's a range market style, like order type. Range
Yeah.
market, yeah. Then there's low and high. If you like either of those orders get filled, the other one will get canceled by itself.
Yeah, exactly. That's what I do. I have the stop order mode in my montage as well, and I use that stop, drop down, range market, range orders. Easiest way to do it. Yeah, easy. And I do it for options, for everything. I've been using that for years, and you don't need to change it. It's right there. Cool. Yeah, thanks. Good one. What's another question here with the summit consolidation?
You already answered that.
I did already. Okay, cool. Thanks. Next, Dave, how to see consolidation and pullback is healthy? We went through that, right, Dave? How do you see a pullback that's healthy and consolidation?
Yeah, you mentioned like in waves, like if it is coming in waves, so then it is healthy.
Yep.
But I was not able to understand, like, okay, so where it would be like unhealthy, like, so where to see like it can be a reversal.
Let's look at it. You know what? Let's look at a 30-minute. Because again, one thing I'll tell you about candlesticks first. No matter what time frame you're looking at, candlesticks are candlesticks, as in patterns are generally the same thing. It's just on daily charts you get gaps because overnight gaps. But even that, you don't really have to get them if you get all the data. But anyways, let's look at it. Candlestick patterns, right? Moving in waves. Here's a bottom. This thing came down. Here's a bottom. It went up, consolidated, pushed up, consolidated, pushed up, pullback, consolidation, pushed up. See, this is all healthy, all the way pushed up, right? Pushed up for a consolidation, pushed up. And then when it comes back down, it really should bounce off of those previous highs. It did not. Here's where I'm going to tell you, all right, as it starts breaking down here, it's breaking this area, going down, I'm telling you, that long is over. I don't know if it's going to reverse. At least the long is likely to be over. This is not healthy now. This is sellers taking over. And sure enough, it took a while before the buyers pushed it up again. So first things first, identify what's a trend and then when's the end of that trend. Forget about reversals. That's like another level, you know. So start with two things. What's a trend? What's a healthy trend? Is waves, and then it fails a wave. It fails to bounce off a recent high, right? I would consider it that way. Even here, actually, this is interesting. You have a breakout. It did go down, but where did it bounce off? You have to look at a previous high. That's it, right there. You can identify it right there. Bounced off of there. That is interesting, right? And this one over here, I'll tell you another thing that's not healthy. It really pushed up, consolidated, but it never bounced off that previous high. So there's an indication. It should come down and bounce off of that high, and then it's more healthy to keep going. You can see it just went and it got exhausted. It went too far. And that's the end of that. So there's a very interesting piece of action there. You can actually anticipate this thing overnight. So you can tell yourself, all right, it hasn't bounced off of there. You would put the line down there. At least a trade like this, put the line down there. It should bounce off there. If it's truly exhausted, that's the reversal zone, right about there. You can zoom out a bit more, maybe find something just a little bit. Oddly enough, hey, look at that. There's a bounce. It happened over there. That's interesting, right? So think of waves again. And waves, you just look at where was the previous high. Or in short, you look at previous low. Make sense?
Yeah.
Cool.
If you look at the meta like today, so now like it breakout from previous resistance 580, and it's almost like pulling back. Like so, is this? What do you think? Like okay, here like these do the sellers taking over, or it is like still like in the uptrend here?
Yeah, so this is interesting. So you have a high here. So there are some lines here. Got a high in this area. It broke right through it. Pullback happened. Didn't really get down there. It's not so healthy. So you'd be careful of this thing going. And it just kept going. It didn't really bounce. And see, again, think of it as breakout retest. Or breakout retest should be happening most of the time. That's healthy. It didn't quite happen. And so look at that. I don't want to go. Now it's just stuck here. This is choppy. It's been choppy in this area. It's here. It's going to be choppy. It's very hard. If you really want to have a very high conviction long, wait for it to come down here in this zone. If it starts to bounce, give you a big double bottom on a 30-minute chart, on that day you'll think, all right, here we go long. So this is unhealthy. This looks unhealthy. Sure enough, because it didn't bounce. When it does bounce, I'll say, okay, now we have a resumption perhaps of an uptrend, and that's healthy. So I would think of it in that way.
Yeah, makes sense.
Yeah, this is a disaster zone right here. All right, Gaten, you want to go into the trade from yesterday? I see your comment. Okay.
Yeah.
Let me stop sharing this screen. I'll share the other. Pull up the screenshot and share. Yeah, Scott, go ahead.
There is a trade that I took for Apple, and I was wondering if you can analyze it. And I want to see whether if the entering point that I had was good or not. Are you sharing screen? You stop sharing, I guess.
No, I stopped sharing. I'm gonna go through one trade right now, and then we'll go into yours.
Okay.
We have a couple of things in the chat here, but yeah, we'll go into it. Hold on, I need a moment. These screenshots, my file here, folder is like, I don't know, it's like 100 gigabytes of screenshots. Can you imagine how many screenshots there are? So it just takes time to load. It feels like 100 gigabytes. Wow, Apple's a mess, huh?
Apple is a long-tailed hammer. You see that?
Yeah, I see it. But that long-tail hammer, look, it happened right after a big bullish
Yeah.
candle. You don't want to go. You don't want to do that. All right, hold on. Let me look at it. Okay, yeah, I got the right screenshots here. Just a moment. I'll get this up for you guys. You guys got me addicted to being on the microphone. You realize that? I'm noticing this about myself now. I don't know if it's healthy. I'm just like all day long talking. And sometimes I feel like I'm just ranting at you guys and you should slap me, tell me to shut up sometimes. So I get tired of my own voice. It's amazing. You guys are so tolerant. I love it. Thank you. All right. Here's yesterday. The trade I got into, I didn't find an opportunity early, but it went down and it reversed off of a level without giving me a reversal setup. So I didn't take the reversal, right? First week, then reverse. But when the reversal happened, it happened firmly and very quickly and firmly. In 1 30-minute candle gets to the next level. So I'm thinking, all right, this is directional and it's reversed. Cool. So a continuation of that reversal is something I'm interested in. That's something I trade. I missed the reversal, but if that reversal is going to continue off of one of my Fibonacci levels to the next level, that's something that I've developed this in last quarter of this year. So it's relatively new, but it's been powerful. So anyways, in this area, I'm interested in the long for the continuation of the reversal on a 30-minute chart. So the 1-minute chart. Now this gets into this area. So what happened? As it gets up, it makes this high. Then that's where I put the line there, right? It makes this low. That's when I put the line. So these green lines only happen after the fact. Okay. The entry I took was here. See that? I'm looking at the high. It rejected the high, and then when it really broke out of the high, I'm thinking that's a good breakout. The stop's down there. Because I know that this is a choppy zone. Ideally, it should be down there. That's way too wide. And again, this is my high conviction level, right? This is my whole basis of the trade is bouncing off of this level. So my entry's there. And again, here's interesting. It gets to the level, pushes down. Gets to a level, pushes down. And again, this is interesting. Next time it gets to the level, it goes with a higher low. Third time at the level. Now, here's an interesting point to think about. Every time it hits itself on a level, let's rather put this, the more often the price hits itself on a level, the more likely it is to break out. That sets up a good breakout. Also, you can see these lows getting higher, and this one higher as well. You can see this ascending wedge. You could have entered here. Would have been a better entry probably because you don't have to risk so much and go. So anyways, I got in here. I also saw this as a tiny consolidation. One candle, see, one big bullish candle, one little consolidation candle where it had done it before with a new high, interesting than before. And then the new high off of that one, I'm like, all right, that's my entry. It was just below that. It was at the top of this candle somewhere. So it made that new high. And yeah, this was a tiny little one. Survived it somehow. The stop was down there and off it goes, got to the target. So holding it to the target, did a little bit of scalping up in that area. I anticipated at 549, it's going to get messy because on the chart here, 549, look at that. It's not ideal, man. It's a little bit, some stuff's going on. It's bouncing off, deeper bounce over here. It was a little tricky. You can see on this day it was clean, but then kind of some stuff's happened here. Look at this, 3 candles got stuck over here, 549. So I'm thinking, okay, the target's 550, but when it gets to 549, I gotta start really paying attention to the garbage, because there's garbage in that area. And no, that's the other one. Here it is. Yeah. So it got to 549, and sure enough, look, it consolidated. And this consolidation, I don't know if it's going to go or not. It's going to break down. So over here in this consolidation, I'm like, all right, that's enough of that. Took off 80 or 90%. De-risk completely. Stop is at break even. And this looks like a ascending triangle to me. So I figured, okay, if it's a good pop up, I'll add in. So the pop happened. As it happened, I added in, went up. 1 minute candle here was reverse hammer. So not a good sign for a move up. As soon as it made a new low off of that, I'm out of there. That's it. 95% gone, a tiny little bit left. And that was the break even at that point. And that's that. That's the whole thing yesterday.
Sorry, Avi.
Where
was your stop loss when you entered?
Down below this level. And that's about as far as I could afford to put it. Now, well, here's the thing I didn't mention. So the entry is here, the stop's below the level. But as soon as this big candle happened and it really exited this area, I moved my stop to below this big candle right here. So that would be just about here. So I cut my risk down from what was, let's say, by 80%. Let's say I risk $50,000. Now the risk is at 10,000, something like that. And then it's off you go. You're risking. So I risked the full amount for maybe 4 or 5 minutes, 5 minutes, let's say, and then quickly tightened it up. And then it's easier to manage. You can just hold it forever. Off you go. So that's how it is. That's how I managed it this one. Cool. Now I got to say, looking back on it, this was an even better entry because you get the push up, you get this consolidation. This begins to look like a little ABCD pattern off of the key level. Key level here goes and makes a highs above what was a troublesome area. Little ABCD pattern just about in that area. You enter in these two candles, stop in the same place, off you go, and you can tighten it up quick. This would have been far better. This was, well, I identified it. It could easily have gone right away. I don't know. But, there are no guarantees. Anyways, that's just in hindsight. Cool. All right. We have Abi's asking, can you show a couple examples, 30-minute price action, choppy versus clean? Yeah, we went into that. We'll go into some more of that. Farzan, what are the common signals to differentiate continuation versus reversal? Yeah, we went into that too, man. Farzan. All right. I promised someone here, sorry, we're going to talk about something just before we got into the screenshot.
Announcements.
Yes, that's coming. But before that, I'm going to hold you guys to that. Before that, I think too fast. I promised you guys, somebody asked me a question just before we got into the screenshot about something I said. After this one, we'll talk about it. You guys are just in the room not paying attention. What the hell? What should I give it?
I think it was Ashan that was wanted to show his example.
All right, let's look at Apple, right?
Apple.
Let's go. Okay, yeah, okay, let's look at that. Okay, I'll put the. You're talking about Apple today, right? Not like.
Yeah, Apple today. Yeah. I had a trade, and I want to see what was a better entry, or not. So if you look at the Apple, if you bring up the Apple 1 minute.
Yeah, just a moment. I'll bring it up. Oh shit! Never mind. I'll do it later. Sorry, I got like multiple things happening here, and I don't honestly, I don't believe in multitasking. I think that's the most disastrous thing any human being can do. But here we are. All right, Apple. What are you looking at?
Okay, so can you go to the 1 minute, and then we can come back to 30.
Alrighty.
So if you put the Avi8ors level. Do you mind? Because I want to talk about the entry point.
1 minute Avi8ors level or 30-minute Avi8ors level?
The 30 minute, yeah. Put it in 30 minute, and then we can come back to. Sorry.
Okay, no worries. Where do we have 8 a.m.? About that. 209 is a very sticky area for Apple. Has been for a little while. All right. Okay, so there we go. Got levels. Let's go to the 1 minute. What do you mean?
So I was looking at the ABC. So I went to a breakout. It comes down to the 210, then it comes to the 211.6. Yes. Okay. So I took my entry at 1023. So if you go to the 1023, because it was getting close to that. Okay. Yeah. 1023. Yeah. I'll go up. So it was 211. Yes. Okay. So that was my entry. Because I thought that this is the level, this is the ABC, and it's just breaking, and I took that entry. And then it worked for me because I was targeting 214. That was because I was just looking at the book map. The question that I have is just, I know that it's not now we see the chart. It's the past, but was that entry at around 225 was a good entry because it was breaking the level of the previous break that we already had around 945 ish, or should I had waited? And then you see that around 1035, 34. Yes, exactly. I know that we can see that it's re-breaking, but I'm just trying to see whether was that 1025 a good entry or it was not.
Yeah, let's do it this way. I think there's a good way to look at this. There you go. So this is what it would have looked like in real time.
Yes, yes.
So you're seeing it.
You see, like I look at this bullish move. I see the VIX. I see that there is pressure to move up. I was looking at the book map, and I said I have to take this, and it's with ABC.
Yeah, I see this. So you're getting a good little ABCD pattern consolidation for the breakout. That makes sense. And so that's a decent setup, but I would be careful about it because the last time it got here, it did a false breakout, and then it did this descending wedge, a very good pattern for a breakdown. So if you're anticipating the long, I would careful of this 212 zone and this 212.50 zone. There's a lot of trouble along the way. Excuse me. So as far as the entry is concerned and looking at a setup, cool, I like it. But then one thing I also like to look at is how likely is this to run smoothly rather than fake me out and stop me out, and then I got a partial, and it may actually just not go at all because there's a tremendous amount of resistance overhead. Those are the questions I'd ask myself before I enter. And I can see just from looking at the 1 minute, this is, I'd be careful. I don't think I would enter this because it can easily just pop up a little and rip right down. And let's say you entered, and then, we can't do it this way because the market's live. But it basically messed around with you a lot, right? They even pushed down. You can see where it pushed down from. Here, where it pushed down from earlier, right? Pretty interesting area. And then it pushed up, and then look at that. It just messed around with you. These look like fat finger trades and stuff. But
I actually saw that VIX, and I see that there is pressure to sell it, but there is always buyers, so I didn't sell it because of those VIX. Because I had a good entry, or maybe it was just luck. I'm not saying it's a good trade. I'm just trying to analyze it to see whether was it a good one or not.
Yeah, I think you got it going right with the entry. Pattern-wise makes sense, and then you're looking at bookmap for more confirmation. That makes sense too. Perhaps bookmap is where you get the conviction that it's likely to break through what you saw as previous resistance. Now that's something I don't do. Oh, look at this mess. Yeah, this is not something I'll play with.
Yeah, I don't know what is going on. I see it in the bookmap as well.
There's a lot of settlement stuff going on. There's back-end market makers playing games, the dark market. Just don't mess with this. When it's behaving like this, don't play with it. But again, I don't have conviction it's going to break out of this area, or well, not necessarily conviction, but I have a struggle to think it's going to be smooth. I think it's going to be difficult to manage if I'm looking at this action. I'm trying to go long in this area. So then I wouldn't take it. But if you are using bookmap and able to consistently gain conviction from that it's going to break through what was previous resistance, you feel like the buyers are stepping up, there's liquidity overhead, whatever it is that you look at. All right, use it, but back test it or look at your statistics. Are you confidently, consistently getting results with it?
Understand. So if I want to just park my strategy on the bookmap, if it was yours, you would not take in at 211.50. You would take it at the break of that 212.40. So I'm trying to understand that a strategy.
Yeah. See, strategy-wise, one thing, setup's good, but also for my strategy, I'm looking back. And over here, just looking back, looking to the left, there's nothing here. It's like just looking to the left gives me a lot of ideas of, is it likely to go? Is it likely to go smoothly or not? Is it likely to stay and get choppy over there? Just looking to the left gives me a lot of information, but that's because I do that a lot because I'm only using candlesticks. I'm not using volume or anything else. So, a lot of times I'll say it's not going to go, but it often goes. But you could have known that it's going to go by looking at something like bookmap or volume or something like that, if you're using such things. Personally, I'm for that.
Sorry. Do you look for the room on the left for just the reversals or for continuations as well?
Continuations as well. Oh yeah, everything. See this one pushed up. This big wick happened. There's room to the left there. Continuation, right? This is not a reversal. Here, this is a continuation. The opening price is down here. It's bullish. Continuation. Boom. Well, I would have taken this long over here. a few months ago, I was trading this stuff. This is a big ABCD continuation play at a level, stop right below, and just rip that up. This is a trade I would have taken a few months ago. I had that style. Different. Cool. Yeah, Piyush, go ahead, and then Gaten.
So just a comment on this trade. If you take Apple alone, then you will be looking at that messy area to the left, and then you may pass on it. But if you look at the portfolio of your top, 5 stocks, you'll see that at the same place, I think, Avi, that's about where you took your SPY. So there's a bunch of these instruments will be correlated. So you can choose the one that is the least messy and with the highest probability to go through, follow through with the price action.
Yeah, that's a good point. You can do that. Personally, I don't deal with correlation stuff. Again, 80-20 is just too much effort. If anything takes more than 5 seconds to figure out, my brain breaks down. So I don't want to do it. But it works. People do it all the time. You can do that.
Yeah, it's essentially the same. It's essentially the same trade, but with a cleaner chart.
Yeah. I get it. Yeah. People do it all the time. Relative strength and different tickers and stuff.
Yeah.
I've never actually consistently been able to do it. So I never really drove that forward. I just abandoned it and got into this. So yeah, take a look. Something to explore and backtest. Again, backtest. Yeah, Gaten, go ahead.
Yes, I wanted to ask I took an entry on NVIDIA like 15 minutes ago or so at 11:27. What do you think about it?
What do I think about it? It's your trade. What are you asking me?
Well, setup wise or 30 minutes stuff.
All good. All right, 30-minute chart. Yeah, okay. Well, where did you enter? Sorry.
At 11:27, so it's about 20 minutes ago or so.
How about you tell us your thinking and setup, and then we can go through it. That'll be good.
Well, I saw some consolidation on the high of the 8 a.m. candle in the pre-market, so I saw there.
Sorry, you're looking at a 1-minute chart when you're talking?
The 30-minute chart first. So there was a little consolidation right there where you're at with your pointer. So I'm looking for a break and then a retest of that level. So on the 1 minute, I identified indeed right there the breakout. It retested and then it showed a bullish candle at 11:27. So I got in.
And then you stopped out. Okay. Yeah, I think this is okay, but it's a scary one because realistically, the best breakouts happen after consolidations. This breakout happened. It didn't consolidate. And it can also do a false retest. So just immediately, there is no consolidation up here on a 1-minute chart. That immediately puts doubts in my mind about everything that happens afterwards.
Yeah.
So be careful with it. I wouldn't put serious risk. If I was doing this, I might put on a little risk, and then if it truly goes new highs, I'll add in and I might scalp it. And anyways, I don't do that stuff anymore. To me, that's just trading too much. That's one way to do it. But again, just think of the structure. The structure's not here. This thing just consolidated. Looks like some news or something happened, and off it goes. Be careful with it. Now you can see where it's bouncing off of interesting areas, right? Here, up close to there. If you're not having levels like I do, you might be along in this area, but then you be careful at the top.
So it's really key to have that consolidation before, right at your level, actually.
Yeah. That's when you get the highest conviction. At least I get the highest confidence to put it on. Yeah.
I entered in this trade at 10:34, right in that below this level, and took the 10:34.
10:30. Oh, sorry. Oh, way back. Oh shit, way down there.
Yeah.
Look at you. Holy shit. No, that's within the 8 a.m. stuff. All right, you're going inside. And wow, you got a good move on this. Fast one too.
Yeah.
Then you go. Okay. I don't trade this area, but that's cool that you can read it. That's a good read, I think, because you have a false breakout, even with higher lows, it goes back in and bounces off of the bottom, off it goes. That's a structure. That's a setup. Again, I used to trade this a year ago. I used to have this all the time, especially at the open. I used to play the volatility this way. You have a big range. As long as it has a false break of the range, then it bounces off the bottom of it. You can get long as soon as you identify that bounce and you're going to the top.
But it was very messy. It was, it almost stopped me out. Very messy.
Yeah, that's why I don't like to trade the inside of this choppy zone. Let's go on the 30-minute. Yeah, look at this. This is a mess. You're trading inside of this mess.
Yeah.
Here it's gonna be messy here. Yeah, just careful with this. I don't want to play this game. Yeah, Gaten, you still here? Another question? No.
Oh, sorry, no.
No. Alrighty. Good. Well, this is fun. I like it. You guys can really get me thinking. I don't think much when I'm not trading, but you guys get me thinking. So that's good. Yeah, Harsha, go ahead.
Oh yeah, you're looking at doing a short on SPY now off these levels?
Oh, don't tell me to do that. Oh, I will do it. No. See, 30 minutes, there's no setup. It just went, indecision, reverse. Actually, there is a setup. Continuation. Yeah. This is a short right here. Continuation of a reversal, but I won't take it here because it's going right into this zone. See, when I take if it goes up here and reverses, then it comes down here, and I'll take the continuation of the reversal short from here to here. I know it's going to be smooth here. It's a bit tricky because it's gonna turn into a mess in there probably. You're getting in there, getting short. This is what you're dealing with. You want to deal with that? I don't want to deal with it. So, but I would take it short from here if it had gone again. Like the way I do these continuations of reversals is it went here, it went without me, did the reversal, then the reverse ABCD down here would be the trade to take short. Not here, just because it'll just look to the left, and once it gets into the zone, it looks like it just wants to sit there for a while. And especially with 0DT options, I'm not going to sit with it. You don't have the luxury of time. It's not something to play with.
Thanks, Avi.
Yep. Cool. All right. What time is it now? 11:51. All righty. Gosh, I really turned myself into an Eastern time zone person. What else is on your minds, guys? Well, I'm missing a lot of stuff in the chat. Anyways, tell me what you want to talk about. I'm still hanging out here till at least 12. Then we can stop the recording and probably end the session. I should sleep. I haven't slept all week. Oh, look at the SPY. Hey, it wants to go. Wants to go. Everything wants to go. Well, you guys are a quiet bunch. Everyone in trades? Is that what's happening?
Oh, everybody's watching. I'm watching.
Y'all are watching. I'm not watching shit. I'm tired. I'm done watching. I don't know how you guys have so much stamina for all this stuff, man. I gotta get away from trading. Get exhausted in an hour of watching and trying to see what's happening, and then I need to go away for an hour, then I can come back and I'm refreshed. Wow, you guys have a lot of stamina. I don't. I just want to go. I'm not gonna watch now, but I'll start doing all that screenshots and all these other little things. So there's the oh wait, what happened to the contract?
Yesterday I watched your video, that first live thing on YouTube.
Oh, don't watch that one. It's a piece of
You used happy words so many times.
Oh, I'm so happy. Don't watch that. I'm gonna have that removed from YouTube. First day trading, I'm like, yay! I made 3R or 2R on a trade. Woohoo! I know what I'm doing. Let's go size up tomorrow. The next 2 days, I doubled my size. So it's $50 risk per trade. Next day, I came $100 risk per trade. I got another 2-3 Rs or something. Next day, $200 risk per trade, and I blew up five grand or 4 grand. I don't even know what. I'm like, oh shit, what is day trading?
And surprisingly, you started on Friday.
Was it Friday? Oh, shit.
Yeah, I mean, you said today's Friday. I will come back on Monday with, hopefully with more news or something like that.
Oh god, don't do that. I don't know what the hell I was doing. I was not doing good things in life at that time. Still trying to.
Your voice was happy.
Yeah, first time you figure out something that always looked impossible, you think you figured it out, and you kind of feel excited about it. But you can see the emotional volatility in that person who was trading there, right? You don't want to be that person. I don't want to be that person. I don't even recognize that guy anymore. Emotional volatility, that's a thing, man. I can't even size this thing properly. Yeah, you don't want to be emotionally volatile. I was, very much so. Couldn't figure out how the hell to day trade or do any of this stuff. What am I doing with this chart? I should. I should take screenshots quickly after the trade's over. Otherwise, I have to do all this resizing nonsense, and it's just not. Again, it takes another extra 30 seconds out of your day. Okay, put this one there, maybe over there. That's okay. Bring this over here. There,
Maybe you need another hotkey to quickly arrange the windows and take a screenshot and save it.
Will you help me? Will you create a hotkey for me for that shit? I don't know how to create hotkeys. I just copy hotkeys, man. It's all I know how to do. Man, okay, time. You can see the time frame. You can see. Okay, I think everything you need to see is here. If anyone asks me to resize this, Andrew's the one who actually keeps messaging me. Hey, resize your screenshot so we can use it. I'm like, no, man, not again. It just bugs me with that every time. Okay, there we go. We got one. That's over. Okay. What the hell? I have to resize it back to what it should be. That belongs there. That belongs there. And all this shit's being recorded, just resizing stuff. And why don't we just end this if you don't have questions? Oh, you guys are missing something. Sorry. Yeah, Abhishek, go ahead. Sorry, I was distracted.
Hey, Avi.
Yeah.
So Avi, sometimes the retests go fairly deep, right? Well under your level, right? So and then it say prints a bullish candle. So do you wait for it to get to the level, or you can still very well go ahead and take the trade, right? If it prints a bullish candle and makes a new high.
You really want to wait for. Wow, this is massive going down. What's happening? You really want to wait for the candlestick to tell you. You don't want to go just because it's going through a level, right? We discussed this a little while back. So let's go in here. You see this bullish candle? It's going through the level right here. You don't want this. You don't want to get in here. This is, you're just chasing it. Where do you put your stop? Let's say you enter here. Will you stop down there? Yeah. Or you put it right on the other side of the level. You would have survived, but this is not smart. Entering here makes sense. You stop below the consolidation. Okay. Okay. You get that. See, I'm not using the level as where to put the stop. I'm using price action. If you identify this bounce and you enter during this candle or the next high or something, you put the stop on the other side of the candle, not on the other side of the level. You enter here, I'm putting stop on the other side of the candle. And actually, that's what I did. I think I entered in this area, the stop was down here. And then as I identified these higher lows, these, call them peaks on the downside, I'm just moving my stop to right below them to the point where it's just at break even, and I let it run. So think of price action first. That's the priority. And then, use that. The levels are just a zone. It's not precision. Think of levels as a zone. That's more important.
Yeah. So on this example, right?
Yeah.
So you see this bullish candle after the red candle, under the level. No, not that. If you just go back, yeah. So this bullish candle, right? So after that, it makes a new high. So do you enter there?
You can, but that's a bit of a pre-entry. You're predetermining that it's going to break out. It could easily just not make a new high and go straight down and get stuck in the range again. So I don't like to do these pre-entries. Now I used to do that. I used to enter and scale up, and now I just enter new highs because I'm waiting for confirmation that it's going in my favor. There's other ways to do it here. If you're using a VWAP or moving average and you have conviction it's bouncing off the average and that's what you want to use, or stuff like that. Okay, but just naked trading, just using pure candlesticks, I wait for the new highs every single time. I'm not gonna play with this.
Makes sense. Thanks.
Sure. All right. Cool. Harsha, yeah, go ahead.
I've got an off-topic question about happy hour tomorrow. Is that okay?
Celebrate.
The Discord channel, for some reason, I couldn't get the voice to work. I even tried the VPN. Something's going on. I could hear the cards, but I couldn't hear you guys. Any thoughts?
I don't fucking know, man. I don't run Discord and shit. VPN. I use a VPN when I have to use Discord, just because over here it's not allowed in Dubai. You should be all right with it. Oh yeah. Go into the settings. Go into the microphone settings within Discord. I have them. Select the right microphone. Maybe it doesn't. Discord may not be able to identify which microphone is on your camera or something like that. It'll give you a menu. Which microphone do you want to use? I do that all the time with different software. I go to Zoom or Google Meet or something. I have to sometimes reselect the microphone. So take a look at that inside the voice channel. That might do it. I've had that issue a few times.
You forgot to share your news, Avi.
Yes, news. Oh gosh, yeah. I keep holding it back. All right, Gateson's got a question here, and then we'll get to the news. Okay.
Yeah. Just to not to talk about charts, let's talk about something else. We see these kinds of results that you have, and we saw already YouTube videos from years back where you traded with a lot less risk. But in order to get to this point, you traded for years now. With what amount or how big was your account in order to grow your account that much in these years? And what were the biggest psychological how do you say it, struggles that you encountered in building that account and building your strategy and the confidence and
Yeah, good questions. Excuse me. I think the psychological troubles or challenges, firstly, taking big losses. You go risk 1% of your account per trade, and 1 hour later you've blown up half your account or 3/4 of it, and you're like, what the hell happened? This is in the first 3 months or 6 months of trading. You realize you just, you don't know what the hell's going on here. So that's challenging when that happens the first time, or the first couple of times. For me, it happened a few times in the first 2 or 3 years. So that's challenging, and you gotta really to deal with that. The best thing to do is step away. Just go away for a week, for a month, whatever you need to do. Just go away and detach, and disengage. Get time and distance. Don't even try and solve the problem. Just try and get time and distance away from day trading, away from the financial markets. Right. So that's very important. Then coming back, of course, after that, once you detach, then you can think clearly and you can see what you did wrong. You look at your old trades. Okay, so you go refine that. You go into the simulator, which is painful because you really want to go live. Everyone wants to go live. Right? I was one of those very anxious people as well. I still am anxious. I still want to go live all the time. But you got to really go and refine. So you got to go back test. You got to go forward test again. Trade it in the sim, and then trade live in the sim and the paper trade the market. Do all those things, 100 trades, at least 6 months or 1 year of doing that, until you really got some confidence in this strategy and in your ability to execute the strategy. And then go live again, small size, $5 risk per trade, something that's not massive, that's not going to destroy you. And then you grow it from there. You grow your confidence from there. So emotionally, those are the biggest challenges. When you blow up and you doubt yourself, you're like, oh, this is not for me. I don't know. I went through all of that for 3 years. I had no idea what my life's going to look like. Am I ever going to do this, or am I going to blow this up? And I can't do anything after that anyway. So it was that. So again, detachment I have found is amazing because it solves 90% of the world's problems. You don't actually have to go solve problems in this world. You really don't. Just let the problem be, and the answer kind of comes to you, or it comes to itself. Time solves most problems. Distance helps a lot. So time and distance from the problem, and you find the problem fizzles away a lot. A lot of it goes away, and then there's just a few little things to look at. As far as building the account size is concerned, yeah, so I blew up a few accounts. And this is where having outside income helps. When you're in the learning curve, you don't just dump everything and then say, I'm going to go figure out day trading. In 6 months, I'll be making millions of dollars. You don't think like that. You do that, you're going to blow it up. That's a guaranteed way of blowing it up, because you put too much pressure on the learning curve. So whatever income you've got outside of trading, that's important. Keep it going, keep it going, keep it going until the point where you're a few years into trading and it's truly doubled your income. You're making twice as much as you do from your other job. And and you've been doing that for a while, consistently, a couple of quarters, I'd say 3 quarters, maybe a year. And then you can consider quitting the job or downsizing the job or something. And then replace your income with trading. So do it that way. But every time you blow up an account, what happens? You have no cash left. So that other income is that you got to build it up, slowly save, and then build up a new trading account. But of course, before you go live again, simulator, backtest, all that stuff. So I went through those cycles a couple of times, and that was no fun. So of course, I had the PDT rule. Being an American, I was in the US, so $25,000 is a minimum. Realistically, I would trade with $35,000, put $50 just per trade. So if I lose that 5 or 10K, that's it. I can't day trade anymore by the SEC regulations. So then again, build up another 5 or 10K, and then don't go live right away. Test your stuff and then go live. So yeah, I think that's really important. I mean, Andrew also still talks. He's been trading for years. He makes millions, but he still has other streams of income, and that's really critical, really healthy. It takes the pressure off trading, and you see trading is high pressure business. Take the pressure off as much as you can, and build it like that. Do it healthy, make it healthy.
Okay, great, thank you. Yeah. And because I'm living in Belgium, and Belgium always has to be a pain in the ass in regards to regulations and stuff. So I'm in the future, I would like to go to options because it's a lot cheaper and it's not taxed the way that stocks are taxed here in Belgium. But yeah, one contract is the equal amount of 100 stocks, which means that your risk level has to be higher than a certain amount. When is the time that you can switch to options in regards to risk? Because if you can't, like you take, let's say 90% off at your target, and you have still 10 or 5% to let it run. But when you are trading with one option, it's not really.
Yeah. Well, here's the thing. There's a couple of interesting points in what you said. I got this from some finance people a long time ago in Mentors. You're thinking about paying taxes on day trading equities, okay. But you shouldn't even be thinking about that until you're making money first. If you truly are profitable, man, you think about that problem when you get there. You're like planning so far ahead. You're not making money day trading. You're thinking, how am I going to pay taxes day trading? What the fuck, man? You're way out there. Bring it back. Come back to reality. Yeah. And then you're jumping into, I got to go options for tax. I'm like, man, you're just off. You're just gone. You're on another planet. Come back here. Figure out your trading. First step. Get good at it. Pay your taxes. Be proud to pay your taxes because, hey, it shows you made money. You can prove it to yourself. You should be happy to sign off that check to the government. Like, hey, look at that. I made money. Showing you off. But get there. And then really get there consistently and get seriously consistent with your trading and your strategy and your ability to execute your strategy, and then leverage that up with options. Then you're maybe on different tax brackets. So don't go leverage something that you're bad at. Why would you leverage up something you're no good at? You're going to get more destruction. Just don't.
Very solid point.
Stay in reality, bro. In reality.
Thanks.
Yeah. Juan, go ahead. You there, Juan?
Thank you, Avi. Yes. Thank you, Avi. Wonder you speak about abundance mind. Is there any read you recommend?
Oh yeah. Oh fuck. Hold on a second. I got a few books right here on my desk. Give me a moment. Let me pull them out. All right, let's start with these. Let's start with what's relevant, and then we'll go a little more trippy. I told this one to you guys before. Peter Castle's The Zen Trader. Start with this, because this one, it's all about, really the whole point is detaching from trading and not getting stuck in the trade odds and not getting stuck in the money. But
hey, Avi, we can't see it.
Oh, I'm sorry. Oh. Yes, no, yes. The Zen Trader by Peter Castle. There we go. It's in the chat. Farzan just typed it up. Thanks, Fars.
Not yet, Avi.
How about that? You can't see it? You can't see the camera? Camera not working?
Yeah, we can see it.
Look at my camera.
We can see it, no problem.
Or just type it in, guys. Somebody please type it in the chat here. The Zen Trader by Peter Castle. I got all kinds of bookmarks on this. It's one of those books you can read over and over again in your life. You don't have to ever read other books. I don't read many books, only the ones that are good. So anyways, this one, what's really good about it, one of the biggest lessons is how to detach from the money when you're trading. And this is not just day trade, it's all kinds of being involved in the financial markets at whatever levels. And so detaching, as in not thinking about the money, just focusing in on the process and the trade and not attaching the P&L to the mortgage or the car or whatever it is you're doing. So that's a good lesson. But then that brings it to abundance, really, because you really have this abundance thing where if you're detached, oddly enough, abundance kind of comes to you more naturally. You don't think much about it. You're not trying to control the P&L, right? So in a roundabout way, you're already getting into that abundance mindset. And I think it's very powerful. This shit turned a lot of stuff around for me about 2 years ago. My trading was like $1,000 a day or something. A lot of you were here when I was doing that. And now it's 100 times that. So really, really important. Again, detachment brings about abundance. It can be hard to understand that, but I can tell you that from my experience, for sure. So very, very, very good. Just follow the process in that book. It's fantastic. Now, the other one that is tremendously obvious to you guys, especially if you're talking to me, and I'm sure all of you are just pissed off with me now because I talk about it way too much, is the 80-20 book. Simple, like seriously simple. 80-20 principle. Because that is all about abundance. It's about these tiny little things you do, and you get massive results. And you got to just trust that those massive results come from these little things. But you got to identify those little things. And part of identifying those little things is eliminating 90% of the shit out there. Right? So it feels weird when you do one little thing and you expect it's going to most likely give you a massive result. Isn't that odd? Most of us are geared up for working hard, and then die one day. That's what we've been told. But I don't believe in that thing. Really just work smart. Do those few things that are truly impactful, and boom, massive results. In trading, to bring it to a smaller scale of just day trading, candlesticks at levels. That's it. That's how I get my results. I'm not looking at anything else. Look at all the other charts, man. There's all kinds of stuff on there that I can't even understand. It's all out there. I don't even care to know anymore. So 80-20 is actually a massive abundance mindset thing. It's fantastic, really. So really powerful. And here's another one that, again, you guys are probably done with, as I've said it many times. Feeling is the Secret by Neville Goddard. Now, this one, probably the most powerful book I've ever read, along with 80-20. But this one actually has brought about a lot of results for me and even got me out of some really shitty places in life. It's more about the law of attraction, not even the law, but how to attract abundance. Not fucking how to attract anything that you choose. If you're choosing abundance, you choose to have an abundance mindset. You want to conduct yourself in your life with that abundance mindset. You're struggling to do it. Well, I mean, actually, take the 40 minutes to read that entire book. It only takes about that long. It's very short. And then just follow the process. Little steps about how to get into that meditative state, how to access your subconscious mind, and how to quite literally bring what you want to you. You don't have to step out of the house. And oddly enough, it comes to you. Like, for me, it's amazing. It comes like the next day. I'm like, holy shit. You really got to do it, though. You got to learn the language of the subconscious mind, which is emotions. But then the door to the mind, the subconscious mind, has to be open. How do you open that door? How does the subconscious mind get into a very receptive state? And then how do you put emotions through that door, the right ones? Right? And maybe you guys call all this hocus pocus, but this is the stuff that works. I call going into religion and praying and all that, to me, that's all hocus pocus. This stuff is real. This is where I really got results from. So there you go. There's 3 books that in roundabout ways bring you a massive amount of abundance. I have not read any specific book on the abundance mindset. I'm sure there's some out there. But these 3 together, insane, man. Really insane stuff. So there you go. Hope that helps.
Yeah, Avi, thank you very much.
Mm-hmm. Yeah, sure. Cool. All right.
Books, 80-20 and Zen Trader, it's not about your trading. It's going to impact your lifestyle. And then if you fix your lifestyle, the trading is coming after. You realize what are the fucking mistakes that you're doing in your life. You got used to it, and then it's going to fix it. Then it's going to impact the rest of your life. That's amazing. You don't need to think about trading. Just read those books. Read them a few times.
Yes, absolutely, man. I'm so glad you said that, Farzan. Thank you. Yeah, we've discussed it many times. And it's the same thing I keep telling you all the time, man. Nobody has trading problems. Everyone has life problems that reflect in their trading. It really reflects. It shows on the chart. Like I tell you, when I look at your screenshots and all, I know exactly what you're going through in your life. It's so funny how it works. I've seen enough traders and screenshots and mentorship stuff. It's just the trading screenshots with your executions, just a window into your personality. I can see right there. It's amazing when you start seeing that. And it really, again, it's not trading. You guys have trouble making profits trading. You don't have trading problems, I promise you. It's your life. Clean that up. And it can be hard to clean up. You wonder what's wrong, but everyone's lives are different. But it's about energies in your life. Like, clean it up. Get the positivity flowing, to the point where you lose $500,000, you can fucking laugh about it. You can be broke and you owe the bank $1 million. It's just a joke, really. It's so funny when you get into that mindset. Like, you live better. And oddly enough, when you start living like that, money just kind of follows. Trading just follows. I'm not trying to trade. I'm just trying to live a good life. And when I show up to trade, it just kind of works out. But that's really what I'm doing. I'm not thinking much about trading when I'm not trading. It's more about how do I push myself to be bigger, better, stronger, faster, all that. So just going and getting more high performance. That's that. Yes, yeah, go ahead.
Hi, Avi. I have two questions.
Yeah.
First, on the 1 minute chart, like as in generic question, how long the consolidation, like if a stock like jumped up and then started the consolidation, which is a typical like place that we want to take, especially if it's at level, right? How long does it take? I mean, how long does you give up from the consolidation and say, no, this is something could go wrong? Do you have something like this? I mean, I see it sometimes when consolidation takes time, start getting,
Yeah. I know what you mean. Yeah, you don't want it to be so long, and obviously you want it to be significant. Let's take a look at the live example here. We got this move up, 2 candles consolidation. All right.
Okay.
Yeah, this move up, this was what, 6, 7 candles, whatever.
Okay.
You have this push up, you have the resistance here, and this consolidated, I don't know, how many, 7, 8 candles before it popped.
Okay.
I'm looking at the downside here. It moved down, you have 5 candles, and it goes. Then it popped down, 2 candles, off it goes. Let's look back. Here you got a zone. You got it pushed up. Was that 5 candles? Off it goes. To me, on a 30-minute chart, 1 candle is enough. Let's go on a 30-minute.
Yeah. Okay.
Here, push down, consolidation, candle, second leg down. But you also have, look, it went up. Look at this consolidation. How many candles was this? Like 8, 10, and then push up.
Yeah,
push up. You got about 4, and then you get the next move up. So, 1 is a minimum. Typically, later on in the day, you'll get more candles.
Yeah, I'm asking about the maximum. Yeah.
I know. That's tricky, but you know what? I think Tesla is a good example today.
Look at NVIDIA, if you don't mind. Look at NVIDIA 1 minute chart for today.
All right, let's look at it.
Between maybe 10:30 and 11:15.
Yeah, this whole area.
Right?
Yeah, this is good. You see that this is a good example. Thanks for bringing this up. This, I'll draw some lines on this chart, and then you tell me what you see, because you guys will, I think you'll like it. Something like that going on. We got something like, put it that way. We got something like that going on. It's kind of something like that. So this is a wedge, right? Bull flag. It goes up. It's getting tighter and tighter. One little false break, but getting tighter and tighter. Look at this last little bit, tighter and tighter, and boom. I mean, holy shit. I used to trade this all the time, actually. Wow, in my first year, 2 years, or whatever. This is still very powerful. If you can read this stuff, this is very cool. Now,
it's making lower lows, making lower lows, lower highs. That's what worries me a little.
Yeah, so one false low, and really it was just mildly higher than the first one, or it was the same place. But then it resumed its trend of higher lows, just respecting that line, right? And it's bullish, not going bearish on this one. You're thinking when the break up, it breaks up. So it's bullish, and then that break. That's how bull flags work. You got to look at the flag pole and then the flag. And go. So this one took what, 30 candles, right? Now this one makes sense. You could still say it's a consolidation if you're like visualizing this bull flag. Okay, so there's one example of a good consolidation. That's 30 candles. It can go for an hour maybe. But I think another example that was not so fun was here. Look at this one. Tesla. Let's zoom into this a bit earlier today. Where is it? Just a minute. I press all kinds of buttons.
Yeah, exactly. See, even the wicks were from the downside looks like.
Yeah. So what quality of consolidation is it? I remember looking at this earlier, and I was like, oh, this is a little curved bottom. This is an interesting one. It makes new high, a really good one. And then after it made 3 or maybe 4 candles here, it looks like that cup and handle pattern. But then the handle got really long. I'm like, after these last 3 or 4, I'm like, oh man, no, this is nothing. This is just a choppy mess. Don't know what's gonna happen.
Yeah.
So there's a shape to the consolidation, a quality of consolidation as well, right? And you can see the difference between what we saw in NVIDIA and what we're seeing here on Tesla. Massive difference, right? And this is telling you, don't touch me. That's telling me, let's go long.
That was a wave. Here it's not. It's same level. Like they open and close on the same, right?
Yeah, this is just overlapping. Yeah,
that's more worrying, right? That's more worrying. This is what he's saying. If it takes long time, they cannot break high. They cannot go low.
Yeah, and it's not going anywhere. And look, another thing, you have 2 things I like to see is each candle here is overlapping each other, and there's wick on both sides. Right
exactly.
There, just the hell with it.
That's right.
Yeah. If you look at the NVIDIA one, we lost it. Hold on, get it back. See, these candles are not overlapping each other. They're actually moving, kind of in waves in a funny way. Only over here, they're getting really compressed and then pop. See that little compression? That's good. If that compression went on for a while, then okay, good, that's over. But you can draw your trend line maybe at this point, and then anticipate when it gets to this area, it could pop. You can draw your trend line here at this point. So from like 10:45 or even from 11 o'clock, you anticipate that the pop would happen around 11:20-ish. Just happened a few minutes earlier. But as soon as you see the compression happening, boom, you can see that.
Yeah.
This happens quite often. If you have an ability to keep an eye on this and really closely monitor it for an hour, then you might catch these. I used to catch these. I don't sit and watch it so closely anymore. But yeah, these are here.
I entered 10:35, but I chickened out later. I mean, I put it break even, and then
that's a tough one.
Said I will not do again, but I did it once more.
These flags are tricky in real time. They're tricky. It's good in hindsight, but I stopped trading them for a good reason. But again, when you're looking at consolidation, it's not just consolidation. Look at the quality of the consolidation. And again, I'll show you on the SPY a quality one. I thought this was, I still think it's a really good quality one where it pushed up and it's got these red two candles. That's a consolidation, but look at that. The buying pressure is good and the new high pop. And I have to do another pop. But this is a good quality one, a really good quality ABCD. Again, perfect setups often fail, but this setup was near perfect for that break of a big level and then retest and go. Just have to do one more dip and then go. No big deal. That's how that goes.
Okay, thank you. Second question. The 30-minute candle, do you look at it while forming or after it finished, then you take it as an authentic, complete representing,
That's interesting. Yeah, so here, look at the 30-minute, you have the consolidation. It comes out here and it looks like it want to break out. I'm not bothered if its candle is closed or not. At this point, I'm already into the 1-minute chart. So it would have been, let's see, coming up to this area here at 11:23. Look, the 10:30 candle didn't close. It should close at 10:30, but 5 minutes before it, I'm already watching it. And I'm trying to catch that 1-minute ABCD pattern. So on a 30 minutes, I'm not necessarily waiting for it to close. And this setup is, where is it? Oh my God, I've lost it. Where is it? Here. This setup is breakout. So you got the consolidation, the breakout. So it's getting up there. And all I'm seeing is that's the consolidation. Once it wants to break, it can break. I mean, this one candle can just go. A 30-minute candle can just run. You don't even know. Well, I'm watching it get there. What's more interesting to me on a 30-minute is that it consolidated tremendously. And it tells me, don't touch me. Don't play over here. But the breakout upside or downside. Down turned out to be a false break when the upside worked. So I'm not waiting for it to close now, in this case.
Okay. Even if it's in the first half of the 30-minute or late, you're more.
I'm not worried.
Because it can reverse, right? Let's say it's in the first 5-10 minutes, it's showing like a big thing, up, and then the next 5-10 minutes.
Yeah. You know what? That's interesting. If it takes 5 minutes or 10 minutes and the whole candle just goes up, you know what's really happening? If you go to the 1 minute, you'll have like 5 minutes of 5 1-minute candles, and they're gonna be they're gonna be huge 1-minute candles.
How do you say those?
Yeah, you're not gonna touch that anyway. So
okay,
let it go. So you don't have to worry about it. Yeah.
Okay.
Oh, yeah. Go ahead.
Thank you.
Yeah, sure. Welcome.
Well, you mentioned it quite a few times already that I think even today in the live session that mindset is really most of the time is the problem and being a consistent trader. And what I'm when I look at it as a bit of an outsider, as not a consistent trader, it is a very fine line. It looks like a very fine line between having the mindset and being a consistent trader and not having that mindset and being a struggling trader. And my question is it really that fine line, and does it stay like this when you are, even if you are experienced, or is it something that when you have it, it just clicks and there you go?
I love your questions, man. Oh my God, you're so detailed. By the way, I don't do as much detail.
Okay.
It's not a fine line. It's not. It's very simple, and it's also not a click. Nothing good just happens overnight. Everything good in this world takes a little time. You got to be patient. But put it this way: there's a procedure. First, get the mindset going, and then the results will follow. And that's it. So don't try and relate one thing too much to the other. You're correlating way too much stuff. Again, you're living on Saturn or something. Just really focus in on that mindset. Adjust your routine, your life, the way you conduct yourself. Start functioning with that abundance mindset on every little thing that you do in your day, in your daily life. Just start trying your best to become more and more abundant mindset with every decision you make. It can be tricky. It's really hard at first to break a lot of old habits. Just focus in on that. Just do that. Just do that. Just do that. Then you'll actually get into the habit of doing that. And then you don't even realize you're just doing it all the time. And then the results will follow. And you're not going to tell me one day it clicked. It doesn't click. The results will follow. Right, and it's not like, okay, you get this, therefore next day trading, you're it's working. It's not like that. It's just not. You're trying too hard to control day trading. Forget about that. Focus on the trader. Become an outstanding human being, as in abundance mindset, all that stuff you got to do, high performance, and let the results follow. Let them come to you. You're chasing the market, chasing results, man. They're going to be elusive. You're always going to perceive that results from the future. Well, that way you're actually pushing it to the future every day. You think, okay, I'm going to make money. Well, if you come here and stand here and say, I'm going to make money, you're not making money right now. You're telling you're going to make money. It's not happening right now. It's not going to happen right now because to you, it's always happening in the future. That's a problem. So stop trying to control it. Stay in the present moment. Work on that abundance mindset. Seriously, read that book, Feeling is a Secret. I think it's tremendous. And really take the time to get into that practice. I do it every day. Even today, I was like doing meditation for like 10 minutes before I showed up here. And yeah, that's amazing.
Okay.
So
Thanks.
I think that stuff. Yeah. Cool, man. Good. Anyone else? Anything else? Any other rubbish on your minds? Yes, Rachel. What's on your mind? Sully got news. You want the news, Sully? I got the news, don't worry. Yeah, Rachel, go ahead. You got your hand up. Something you want to say or ask?
Yes. Okay.
Can't hear you. Your microphone's all weird.
What about now?
That's better. Wow, blew my ears off. Thank you.
Sorry. I'm confused on something. So because I understand that it's important to look for consolidation, and when consolidation is happening at the top of one of the ranges, like one of the Fibonacci levels, sometimes you'll consolidate, but then I can never tell whether or not it's actually consolidating to at the top of that range to break out of that range to go higher, or it's eventually going to reject that range because it tried many times to at that consolidate or trying to push out of that range, and it will actually reject and go lower. So what are some candlestick patterns or signs that you look for to know whether or not one is consolidating at the top of the range will go higher or lower?
All right, so let's look at this example right here on the screen. It's a good one. You have the let's just use this line. This is the level. You can see it's consolidating here, pushed down. Now the next time it goes there, it actually makes a new high. That's your interesting point right there. That's where you can begin to think, hey, it might be, new high is a good sign for a continued higher move. It might be going. You take your entry long for the breakout. You get a tight little stop. It doesn't work. You stop out within a minute or a couple of minutes. Tiny little loss, 1R, no big deal. The next time, it again makes a new high. You get your entry, put your stop, and you got a winner. The new high is interesting, always interesting. Even here today, same thing happened. You had this level, the new high, and then it went back in. I stopped out real quick. New high again above that green line, above the even previous high. That's the one that worked. So just when it comes to reading candlesticks or naked trading, which is just reading candlesticks, you're looking for new highs as confirmation that now the bullish move is likely to happen or it's likely to break out. And same on the downside. That's what I use. That's all I really use. Consolidate. Once consolidation's done, you don't know when it's going to be done until it shows you that it's done, and it shows you when it's done, when it makes a new high. That's how I do these trades. Hope that helps. Cool. All right. Now you'll want the news. Sorry, yeah, Dan, go ahead.
Yeah, good morning. Can you hear me okay?
Yep, gotcha.
The SPY example there on the 30-minute consolidation, some people could be subjective at that and say, well, it's actually trending down in the pre-market.
Down here?
Yep.
Yeah, that's true. So here's what's interesting. You have a consolidation at the top, which could likely break out. And then it got messy in the range and went down and then consolidated near the bottom. And it even did a bit of a false breakout before the open actually opened in the middle of the range. So you're already beginning to have some doubts about a true breakdown because it already did a false breakdown, which sets up for a good breakout the other side. Now, today at the open happened to be, it did break down, did make a new low, but that actually still happened to be a false break. There you go. So you may have taken that. I didn't want to touch that early today with the news and whatever. You may have taken that. You would have stopped out. No big deal. Take 1 or 2 stops. That's okay. That's healthy. You know? So, but then when it gets up there, after a false breakout, you have a lot more conviction for a genuine breakout on the other end. That's the Wyckoff stuff. Now, you want a consolidation before the breakout. Yeah, it already happened. It's there. And it did its false stuff on this side. And there you go. Now it's ready to rip and go. So that's how I see these things. Very often I'll take this and it looks like there's no consolidation, but there is. It's right there. It already happened a little earlier in the day. That's why 30-minute charts are great. Not too many candles, but it gives you a lot of information. So I see it there, and it works nicely. Yeah.
All right. Thanks, Abby. Appreciate it.
Sure. Yeah, my pleasure. All right. Now that we've got all the day trading stuff out of the way and you all think we can day trade and make a living out of it, we can't. That's the first news I should tell you. We can't. What we can do is become a day trader, become the best version of ourselves, and then day trading works out on its own. Don't try and control it. There's one piece of news. There's 3 more, 2 more, 2 more. All right. A lot of y'all in the chat have been asking. Actually, hold on. Well, we can stop recording for the educational purposes. The recording can stop. And we can do the new stuff.